Welcome to the final episode of our foundational series. I'm Ege. So far, we have covered the markets, the timing, the math, and the candles. And today, we'll learn about the map of trading. The two lines that every chart respects, support and resistance. Get these two concepts, and every chart will start making sense to you. So, let's begin. Here's what we'll cover in the next several minutes. 1. What support and resistance actually are. 2. Why they exist. It's pure psychology. 3. How to draw them yourself. And finally, 4. The two ways to trade them. So, let's dive in. What is a support? Support is a price level where buyers consistently step in. When price falls towards support, buyers expect a bounce, and so they buy. That collective expectation creates a floor. Price drops to support, finds buyers, bounces. Drops again, finds buyers, bounces again. The more times a level holds, the stronger it becomes, until it doesn't. Resistance is the mirror image, a price level where sellers consistently step in. When price rises toward resistance, sellers expect a rejection. They sell. Price hits resistance, sellers swarm. Price falls. Hits it again, falls again. A ceiling, until enough buyers overwhelm the sellers and we get a breakout. But why do these levels exist? That is pure psychology. The market has a memory. Every trader who bought at a level wants to buy there again. It worked last time. Every trader who got burned at a level wants to sell there next time. It failed there. Add up thousands of these moves, and a level becomes a battle line. Support and resistance are where collective memory turns into collective action. There are three ways to find support and resistance. Method 1. Swing highs and swing lows. The most obvious price tops and bottoms. Draw a horizontal line there. Method 2. Round numbers. 1.0800, 1.1000, 50,000 for Bitcoin. Humans love round numbers, so does the market. Method 3. Previous reactions. If price reversed there before, it might reverse there again. Market. The more reactions a level has, the more important it is. Here's the magic property of support and resistance. When support breaks, it becomes resistance. When resistance breaks, it becomes support. But why? Because traders who bought at a support are now underwater. They want out as soon as price returns. That selling pressure creates new resistance. Same level, opposite role. This is the single most powerful concept in level-based trading. But not all levels are equal. A strong level has three traits. 1. It has been tested many times. 2. It appears on multiple time frames: the daily, the 4-hour, the hourly. And finally, 3. It has a clean reaction, not a sloppy back and forth. Weak levels touch once or twice and barely react. The market shows you which is which. Watch the VIX, watch the volume. There are two valid approaches to trade support and resistance. First, bounce trading. Wait for price to reach support or resistance and look for a rejection signal, a wick, an engulfing candle. Then enter in the direction of the bounce. Second, breakout trading. Wait for price to clearly break through the level, then enter in the breakout direction. Bounce trading wins more often. Breakout trading wins bigger. Pick one, master it, then add the other. There are three deadly mistakes that most of the traders do. 1. Drawing too many lines. 5 support and resistance lines on a chart is signal. 20 is noise. Be picky. 2. Treating support and resistance as exact prices. They're zones, not surgical levels. Allow some flex. 3. Ignoring the bigger time frame. A daily resistance crushes any 5-minute support. Always check the bigger picture first. Here are 4 pro tips to lock in. 1. Start with the daily chart. Mark the major levels, then zoom in. 2. Fewer lines, better trades. Quality always beats quantity. 3. Combine support and resistance with candle patterns from episode 10. A hammer at support is gold. 4. When price breaks a major level convincingly, expect role reversal. Wait for the retest, then enter. There are 5 things to take with you. 1. Support is a floor where buyers step in, and resistance is a ceiling where sellers step in. 2. They exist because of collective trader memory. 3. Broken support becomes resistance, and vice versa. 4. Combine them with candles and timeframes for real signals. And finally, 5. Fewer levels drawn well beats dozens drawn carelessly. That's it, you have completed the foundations. 11 episodes, 11 core ideas. You can now speak the language of the market, understand the math, respect the risks, and read the charts. Next step isn't another video, it's a chart. Go try what you have learned in these 11 episodes and you'll see the progress. And now, if you're ready to put up what you have learned into practice, BEM funding helps you do that. You take the trades, BEM takes the risks. I'll see you in season 2. Take care.